This content is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All hypothetical examples are for the purposes of teaching principles and are not intended to suggest future results. The risk of loss in trading securities, options, futures, and forex can be substantial. Customers must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Any results shared should not be considered typical.
Welcome back to the last night of the Ultimate Trading Summit, day 4. Last night, best night, am I right? If you're here live, thank you guys for coming on back, all 57 of you that are here on time. The amazing thing is that's going to triple in the next 5 minutes, and that's okay because everybody has learned to loathe this screen. They skip it. They set their alarm 5 minutes behind so that they don't have to understand that this training is for educational purposes only. What, pray tell, will they do if they're not fully disclaimed? Certainly they won't lose any of their own money because they were smart and got a funded trading account from Tradesmart University. See what I did there? Nonetheless, we still have to disclaim everybody. Any results shared should not be considered typical. Tonight, we're talking about moving from finance to freedom or maximization. This is the fourth and final step in the ultimate trading formula. The 3 core steps, analyze, strategize, monetize, are wonderful. For years, that has been the hallmark of the ultimate trading formula. And for you guys, I've added a 4th step because I realized that in the course of my teaching people how to trade, we always get to this moment here tonight where I say, look, learning how to trade is great, but it's not everything. If all you learn how to do is give yourself another job and you lack freedom, then we've not really moved the ball forward, have we? So we're going to talk about that this evening, but I want you to keep in mind if your win-loss ratio is not 70%, you need help with your analysis, and I would encourage you to check out the apprenticeships that deal with analysis. If your win-loss ratio is okay, but yet you're not making $500 a week cash in your jeans. I mean, like real cash, not like you made $600 and then you lost 400 of it. I mean, $500 at the end of the week you could withdraw from your funded account if you wanted to. If you're not there yet, you probably need help with some strategy, and I would encourage you to look at those apprenticeships. But if your analysis is okay and your strategy is okay, but you're having trouble pulling all of the pieces together, I would encourage you to take a look at monetization. And we talked a little bit about that last night. And then finally this evening, we're going to be talking about maximization. Hey, Kirk. Neil, I saw Neil is in. I don't know if your name made it on my roster, but I saw Neil. I think it was you, Neil, except I believe the one I saw had a Y in it. So maybe there's 2 Neils in it here. Somebody asked earlier, I have a slide for this. Remember, you have 2 hours left to claim that free $20,000 account. When the timer hits 0, it goes bye-bye. As a quick reminder, every Tradesmart apprenticeship has 10 education sessions, 10 application sessions, the private apprenticeship community and accountability. That's access to the instructor and all of your fellow students. And this has varying degrees of interest. That's probably the wrong word, but let me just say each community is different. If you're in a community like Trader Traction, some of those people have been together for 3.5 years now. They're very smart. Other apprenticeships are brand new, like Rebecca's apprenticeship. And so there'll be a different dynamic in that apprenticeship. They'll be supporting each other. People that are in Trader Traction, you're going to find that the veterans are supporting you. They're giving you as much insight, perhaps, as Scott Landers is. Now, each apprenticeship also has 3 bonuses: a time saver, an accelerator, and a confidence booster. It makes it faster, easier, and more certain that you're going to achieve your outcome. Depending on the apprenticeship, they are all uniquely selected. And then lastly, as a Tradesmart apprenticeship student, you do get access to our trader funding program. Now, last night, I made a big mistake. I mean, a big mistake. Could you all sense a little bit of frustration in Rebecca's voice when she got on the microphone? And she was thinking, he has really done it now. I managed to confuse a lot of people. And here's my heart in that. I'll tell you, last year, an apprenticeship was $950 times 4. That was it. It was so simple. 4 payments of $950, and you could join an apprenticeship. But as we were sitting down and designing 2025, I wanted to make the apprenticeship experience even more accessible. So we lowered the price, we slashed the number of payments, and we added this thing that confused everybody, which was the enrollment fee. So would you give me just 5 minutes to explain this, perhaps in a better way? Because I really don't want you guys to miss out on this opportunity because I fumbled the numbers a little bit. So here's how it works. You have 2 options. You can sign up for a quarter or for a year. I think John just said he signed up for a quarter. Neil, with the Y, signed up for a year. Honey signed up for a year. It doesn't matter. I mean, if you care, like 90% of the people have signed up for a year, but that's okay. It's designed for you to engage at whatever level you want to. If you sign up for a quarter, here's how it works. Tonight, you have a single enrollment fee that you pay. And that gives you access to that $20,000 account, and that means you're in the door. And then you have your tuition. Tuition is paid at the end of each month. So there's 3 tuition payments of $730. Now, if you sign up for a year, what we do is give you a little bit of a discount on that enrollment. And we also give you a discount on your tuition. You'll have $680 payments for the remainder of the year. So let me make this crystal clear in how this works. This is your first quarter of the apprenticeship, whether you're doing 1 quarter or you're continuing on after this, week by week. Tonight or last night, your enrollment fee got you in the door. This enrollment fee is 100% refundable. Let me use a different color so it stands out even more. 100% refundable. Try it for the first 2 weeks. Get access to the masterclass bonus, and you can keep that whether you continue on or not. Then you continue on 2nd week, 3rd week, and at the end of the 4th week is your tuition payment. Now, what are we trying to do here? We're trying to make it so that your trades pay for this sucker. Are you going to get the first one? I don't know. It'll be close, depending on which apprenticeship you're in. And I mean, if you're like Honey and you've been in Trader Traction for 3 years, yeah, probably. There's a really good chance she's going to hit that times 10. Then you come down. Week 5, week 6 is a break, week 7, and then your next tuition payment is due on week 8. And then week 9, week 10, week 11, the apprenticeship ends, but no, your last payment doesn't come out until even a week after that. Let's say you signed up for the whole year. You're committed. Again, $297 tonight or last night. Why is that cheaper? Because these people committed to a whole year. I want to honor that. I want to make that easy for you. So if you sign up for a whole year, then your 2nd week, by the way, this is fully refundable. By the 3rd week, we're asking you to get locked in, make sure you've got the right apprenticeship teacher that you're connected with. We'll give you that $20,000 account that you qualified for because you enrolled within the bonus. Please don't miss that. And then the 4th week is when your tuition payment is due. Our goal is to get you to the point where you can have that tuition payment covered. Are you going to hit it? I hope so. But if you've never placed a trade in your life before, it might take you a couple more weeks. Just shooting straight. Then week 5, week 6, week 7, at the end of week 8 is your 2nd tuition payment. Week 9, week 10, week 11, and then week 12 is your final tuition payment. Excuse me, not your final, your next tuition payment, but then as a annual apprenticeship student, then it will continue on. There's no more enrollment fees. You avoid those for the rest of the year, and then once a month, you have a tuition payment that comes out. But Josh, what if I'm going on vacation? I need to pause it for a quarter. No big deal. Reach out to us. Say, hey, next quarter I'm going to take off, but I'll see you for Q3. Awesome. Rebecca will take care of that for you. And then let me make this a no-brainer. This is a promise, and I like promise over guarantee. Guarantee is clinical. Promise is me talking to you. Try it for 2 weeks. And if you don't see how you're going to make at least 4 times that monthly tuition, right? Our goal is $2,000 a month cash in your jeans minimum. If you don't see how you'll make that, I'll personally give you 100% refund. We'll part, we'll be best friends. You'll see me on the street in Nashville. I'll give you a hug and wish you your very, very best. Friends, and you guys here right now, all 100 of y'all that are in here, you've been here 4 nights. I'm giving you the trading account. I'm giving you the education. I'm giving you a guarantee. You literally can't lose any of your own money, and you literally have no risk in the training. I don't know how to make it any easier. And it's the cheapest it'll ever be. I think it's actually too cheap. Here's the people that took action. There's about 10 that are not on this list because y'all waited until right before class. But Barbara, Brenda, Barry, Joe, John, James, Robert, Lawrence, Stephen, Kevin, Irving, Thomas, Wendy, Johnson, Bob, Honey, Jerry, William, Sean, Shaylee, Barbara, Modesto, Richard, Joel, Paula, Lance, George, Paul, Michael, Carrie, Stephanie, Joe, Kevin, Robert, Sudukar, Bella, James, Sorties, Dale, Kirk, David, Susan, Randall, Tamara, Kimberly, Robert, John. Oops, Robert, I put your whole name on there. Oh, all these are the whole name. John, Ed, Jeff, Scott, Kathy, and Andrew. Go stalk them on Facebook. No, don't do that. That's wrong. And about 10 more that I missed right before class. Thank you guys for jumping in. I'm so excited to see you guys work towards your first or your next 25,000 in 2025. I'm crazy enough to think we could knock that out in a quarter, maybe 2 quarters, and then let's do it again for Q3 and Q4. So last time on the screen here, if you sign up for a quarter, there's a single enrollment fee, and then at the end of each month, for 3 months, there's a tuition. If you sign up for a year, there's a discounted enrollment fee, because candidly, you're a rock star, and you deserve a discount. And then for the yearly people, there's a tuition at the end of each month for the next 12 months. Crystal clear? Type 1 in the chat pane if that is a little bit more easy to understand. Nice. All right. You've got 1 hour and 48 minutes left. Do it. And if we didn't put a link in the chat pane, they'll do that right away. Well, you know, I'll do this real quickly. You're not going to miss out on anything, I promise you. We'll get all the content in, and it will be amazing. So when you click on that link, and I'll just drop it. Oops, they already did it. Thank you, Rebecca. So here's everything laid out for you. You put it in, you select, I want the quarterly, all right? That's the $497, or I want the annual, because I'm a stud. $297. When you click that, you're going to come to this page right here, and then you'll type in your email, and this is where you can pick. I want to do the Start Smart, I want to do Foundations, I want to do Empowered, I want to do Hybrid, I want to do the Options Accelerator, which you're going to learn about in just a minute. I want to do Trader Traction, or my favorite, I don't know. I just know that I want to make $25,000 this year. Can you help me? And if you click I don't know and hit submit, Rebecca will schedule a call with you, and she will help direct you into the right apprenticeship. I don't want to confuse everybody tonight with all the different options that are available. If you're brand new, we got an apprenticeship for you. If you're intermediate, we got an apprenticeship for you. If you're a fund manager, I got a guy for you. You're going to make $25 million this year instead of $25,000. Okay? We'll help you get into the right place. And if by some happenstance there's not an apprenticeship for you, then you say, I'd like to take advantage of my risk-free promise and get a refund after 2 weeks. And we'll say, no problem. Okay, wonderful. Nathan is in. I lost my slideshow. Here it is. Thank you guys for indulging that. Let's talk about the day job, or moving from finance to freedom. As I set this up for Chris Burgess to come on, imagine with me, if you will, this scene. I'm going to need some public participation here. It turns out that I have become aware today of a slot machine in Vegas. I know the casino, I know the machine, I can give you directions directly to it, and every time you pull the lever, a dollar bill comes out. Literally, you don't have to put any money in. You pull the lever, a dollar bill comes out. You pull the lever again, a dollar bill comes out. With a show of emojis, pick your favorite emoji. How many of you all would be interested in that information if I had it? Two of you. Some of you are like, this is so sensational. Does he want me to punch the emoji in or not? Yeah, like for real. I lost my cursor here. There we go. Most people, there they come now. Maybe my internet's delaying. Most people would be interested in that little factoid. Let's suspend reality for a second and assume that that's accurate. And it would be very exciting, would it not? The first day, you're pulling the lever. How many times, type in the chat pane a number of how many times you think you could pull the lever in 1 minute. Like, I've actually never played a slot machine, so I don't know how hard those things are to pull. But what do you think? What's a reasonable number of pulls per minute? Let's figure out. It's 4 pulls per minute, says Deanna. 60, says James. 100. Mike's making $100 a minute, $6,000 an hour. Did I do that math right in my head? Somewhere between $240 and $6,000 an hour is what this mythical slot machine will generate. And that is very exciting today. And that is very exciting tomorrow. And that is very exciting this week and next week. But what if we suspend this reality and we push out 5 years from now? Can you imagine a scenario where you're saying you got, $10 billion in your bank account, and you're saying to your significant other, sweetheart, I gotta tell you, this chair is terrible at the casino, and that lever is giving me carpal tunnel, workman's comp. Turns out, I don't really like this job anymore. Because you know where else you can go and pull a lever and make $20, $30 an hour? A factory. What's the difference between pulling the lever on the magical slot machine that spits out $1 and pulling the lever at a factory? You go home with carpal tunnel and you cash your check each week. And so it turns out that the certainty of generating cash with a certain action might not actually bring with us the joy and the outcome that we were pursuing. And so my question to you is, as I get ready to hand this over to Chris Burgess, which do you seek? Is it certainty or is it freedom? And I would contend that if we lose sight of freedom and we exchange that for certainty, it doesn't matter how skilled you get at the stock market, you are not going to find contentment. You see, we can give you the systems where, metaphorically, you pull the lever, $1 comes out. We got strategies for that. We've got strategies that are 90% win-loss ratio. So you pull the lever, and 9 times out of 10, $1 is going to come out. One time you need to give $1 back. And that will be exciting for the first week, the first month, the first year. I don't know when your excitement runs out, but at some point you find yourself saying, I feel like I've got another job. I learned to trade so I could leave my job, and now I've got another job. And so I would challenge you that what it is you likely seek is freedom. And there's a few ways that you can maximize your freedom. By far, one of my favorite is with options trading. One of my favorite stories that I have from my days of teaching, I was working with, it was a large class, and we were in a session on options trading, and it was a particular strategy called a covered call. And a covered call, if you're unfamiliar with it, is metaphorically analogous. It's analogous to owning a house and then renting it out, collecting rental income on your house, except you're doing it with stock. And there was a gentleman in there, he was an airline pilot for Southwest Airlines, and they had compensated him for the last 40 years of his career with shares, and he had amassed a pretty large amount of shares. And we started doing math on this with a covered call strategy, and he realized that he could more than double his income with his pre-planned retirement package that he was working towards. He could double that using this one strategy, and it was hands off. His name was Jim, and in that moment, Jim realized he was free. And it was options trading that did that for him. So Tonight, I've invited my dear friend Chris Burgess to come and give us an introduction into options. Chris is our options guru here. He's the resident genius focusing on flexible cash flowing strategies. He's a blend of fundamental and technical analysis. He's similar to Alfonso in that way. Actually, Chris was the one that kind of opened my eyes to the benefits of fundamental analysis. In fact, some of you guys that remember way back to 2019 when Chris started with us, his very first apprenticeship that he mentored was on fundamental analysis. Some of you guys took that apprenticeship. He's also the inventor of several custom scanners and trading systems. He loves to get his hands into programming languages, and he creates all kinds of amazing, wonderful things for himself and his students. He is the author and the mentor in the Options Accelerator Apprenticeship. Ladies and gentlemen, would you light up the emoji pane for my dear friend, Chris Burgess?
Thank you. I gotta figure out how I can take over the screen here.
Wait,
Hold
do you
on
have
just
a
a second.
trading t-shirt on? What's going on here?
Yeah, you like that?
Bro, that's amazing.
Yeah. Figured it was a good night to represent.
Come on. I like your watch too. I'm into circle watches as well.
You got me that too. Right on. Let's see. Share screen. That's the one. All right. Are we? You guys share my screen?
I got it.
Okay. Sweet. You should be able to see my presentation now, yeah?
I see your whole desktop. Is that what you're trying to share? Or the whole Keynote window?
I just wanted Keynote.
That's all I see. It's just not full screen.
Oh, okay. Cool. Perfect. And now it should be. Yes.
Beautiful.
Fantastic. All right. I've got my second monitor over here, so I just wanted to make sure that like it was sharing the right screen and everything. Cool. All right. So I was really excited to be the one to present on Wednesday here, partly because, as you guys know, you always save the best for last, but also partly because the theme for tonight is maximize. And I thought a little conversation about options here would just fit perfectly in with maximization. Might have got the signals crossed a little bit with Josh because he's talking about maximizing your life and your freedom and all of that. And I'm like much more narrowly focused on maximizing your trades. But that's where we're going to focus tonight, at least for the next few minutes here. So I am, as Josh said, the resident options guy here. So that's me. Quick background, not that you guys care, but I have a background in production art, which is very far from what I do now. But I started studying finance and trading because I was basically sick of being broke in college. So I started doing this and eventually led my way up to basically quitting my job to travel and explore the world. So that's what I do. It's what I've been doing. It is a 5-string bass. Yes, well spotted. So I'm basically living the digital nomad life, been all over the place. I joined the Tradesmart University team in 2019. As Josh said, I was first teaching fundamentals, and since then I've kind of slotted into being the options guy, which is fine with me because I absolutely love options. So nowadays I focus on teaching options trading with a focus on safe, defined risk strategies. So options are the best way that I know to maximize your trades. Absolutely, without a doubt. There's all kinds of different ways to trade. There's, as the saying goes, a million ways to make $1 million in the markets. And options are the best way that I know once you have a good system and decent analysis techniques and all of that, options will essentially be an accelerator on your trading, which is why I call my apprenticeship the Options Accelerator. At the same time, though, I'm always focused on keeping risk small and managed. So in the VIP session earlier today, we actually had a discussion at the end about stop losses and how stop losses aren't exactly perfect. You can definitely lose more than you were planning on when you size your trades to stop losses, but options kind of let you get around that and have very managed risk and know exactly how much you're going to lose no matter what happens. So I'm going to show you guys what I'm talking about here, essentially how to keep your risk small and maximize returns using risk graphs. Is anyone here experienced with the risk graphs? I know we have a couple people that are more advanced here, so you guys probably do, but I'm guessing most of you guys have never seen a risk graph before, have you? Well, Barry, you've been in my classes, so I know you have. All right, we got a lot of people that have not, and that's kind of what I assumed. So risk graph is a way to visualize your potential profit and loss on a trade. So we're going to take a look at those. Now, I am about to hop over to a trading platform, and I'm going to build out a risk graph with live options with you guys. So I just wanted to say, for everyone that is brand new to options, if you don't know what options are and you're not sure what I'm going to be talking about, what I'm going to be doing, especially when we look at like the option chain and all of that, don't worry about the details, right? I don't want you guys to lose the forest for the trees here. If you want to learn more about options, you've got plenty of time to learn all about strikes and deltas and spreads and things like that. So we're not going to get too lost in the weeds tonight. I just want you guys to focus on the big picture, which is how options reduce your risk. So we're going to look at maximization of returns, reduction of risks, and essentially how we do that through options. So we're all good with that. I'm going to exit the presentation, and we're going to do the rest of this over in Thinkorswim. If I can get the window over. Oh, demaximize yourself, please. There we go. Okay. All right. So wish me luck. We'll see how this goes. Because it's never the same doing it live. All right. So let's say that you got this trade on Zoom. I had to find new examples because I had a couple examples that I was going to look at, and then everything moved so much today with the huge gap up and everything. I was like, I want an example that looks semi-realistic. Going back to the disclaimers, this is not advice to buy Zoom. I'm not saying you should trade Zoom. I don't have a position in Zoom. I'm not trying to get you guys into a position in Zoom. We're purely hypothetical, right? We're just using it as an example. So let's say you pulled up Zoom here. You look at the chart, you're looking at it and you're, okay, well, we got this support level down here, this demand zone around 78. It looks like we're starting to bounce up again. Maybe I'm going to take a trade on Zoom, basically looking for a move upwards, right? And we did that poll, was it last night, a couple of nights ago, asking people, if you were primarily swing traders, position traders, day traders, that sort of thing. And I think most of the results were swing traders. So let's just use that as an example. Let's say that you're going to plan to be in this trade for, well, the end of this week is probably a little too soon. It's on Friday. So let's say the end of next week, right? You want to give yourself a few days for this trade to work out. And basically, you're just looking for a continuation move up here for the next couple of days. All on board? So if we're going to structure that with stocks, what we would do is go into the market here and we would buy shares at $80.26 per share, right? Pretty sure everyone gets that. So if we were going to look at that on a risk graph, what that would do is show us essentially how much profit or loss we would make based on where the stock price goes. So I think you guys all know this intuitively, right? If I buy shares at $80.26 per share, as the share price goes up, I make money. If the share price goes down, I lose money, right? It's a very linear relationship. So we can actually look at this on Thinkorswim. They have what's called a risk profile built into the software. So if we go over to the Analyze tab and look at the risk profile, we can look at the risk profile of a stock graph. So if I were to buy shares here at $80.26 per share, then I would have this very linear graph, right? So what you're looking at here, this is the risk graph. And essentially, we've got the stock price here across the x-axis, okay? So the price is currently here at $80 and change. And as the stock price goes up, we move to the right. As the stock price goes down, we move to the left. So we kind of take the stock graph where the price of the stock is over on the y-axis, and we just turn it 90 degrees. So the price of the stock is now on the x-axis. We all on board so far? Making sense? So that's the x-axis. And then the y-axis here is actually how much I would make or lose from this trade, okay? So that's the chart that we are looking at here. And as you can see, it's just a straight line. As the stock goes up from 80 and change up to 81, to 82, to 83, and so on, my profits go higher and higher and higher, right? So at 81 and change, I make $100. At 82 and change, I make $200, and so on and so forth, right? So that visually describes a relationship that you guys all know. As the stock goes up, I make money. As the stock goes down, I would lose money, right? Going the other direction here. So I have my zero line through the middle, and everything below that is losing money, which is what happens if the stock were to go down from here. So that's the risk graph of a stock. Pretty straightforward. Now, what if we were to, instead of just buying a stock, what if we were to buy an option notice how the risk graph changes here. So if I were to look at an option, notice a couple of things about this. One, it still goes up and to the right as we keep going up. So as the stock keeps going up, I can keep making money on this, right? And I'm going to fix my scale here. So if I were to drag this chart to the right and just keep dragging it, this line keeps going on forever and ever. So just like with a stock, the more the stock goes up, the more money I can make. But what you guys probably noticed that looks very different about the option risk graph than the stock risk graph is that it doesn't keep going down, right? It flattens out here. That was not a very good straight line. It flattens out here. There we go. So that means that I can't lose more than this amount of money here. And whatever that amount is what I pay for the option. So in this example, I'm looking at paying $1.63 per share. So that would be $163 on this trade. That's the most I could lose on this. So I'm taking a bet that Zoom is going to go up, and I'm paying $163 for that bet. And that's the most I can lose. It doesn't matter if Zoom opens up at $50 tomorrow, right? It could have a huge gap down. It could go to zero. We could find out that Zoom's actually been a scam this entire time. It's not a real company. They've been cooking their books, and it's actually worth nothing. If that were to happen, I would still only lose $163, right? There is absolutely no way for me to lose more than that on this trade. So unlike with a stock where I can place a stop, and that stop can get gapped over if something bad happens, right? If some bad news comes out. If I get gapped over, well, my stop doesn't really help me too much. But if I'm trading options, then my risk is very, very certain. It's very managed, right? There is absolutely no way possible for me to lose more than $163 on this trade. So that's reason number one why I love options. Because when I go into a trade, I know up front what my risk is. I know exactly how much I can lose. Now, there's something really interesting that I love about options. And this is going to get a little bit more advanced. So I want you guys to just bear with me. Again, if you're brand new to options, I just want you to understand the broad concepts. You don't have to understand how we structure this or put it together or anything. Just get the concepts here. Now, if we go back to the chart real quick, how high could Zoom go? What do you guys think? Let's say we're looking for a move by the end of next week, because that's the expirations I chose. So by the end of next Friday, where do you guys think Zoom could get to? So we've got one, Josh says 87. I think that's reasonable. I mean, if we look at it here, we've definitely got some nice resistance level up there. I also see some congestion here around maybe 83-ish or so. 86 to 88. Scott says to infinity and beyond. Technically correct. There's nothing stopping Zoom from going higher. So we have all kinds of different ways that we can look at where the stock could go from here, right? And none of your answers are wrong. However, if we were to do some statistical modeling, right? If we were going to look at how much does Zoom move on average, how much has it been moving lately, and what is the average move for Zoom, right? What is the amount that Zoom typically moves in a normal amount of time, which in our case is about a week and a half here? Well, Thinkorswim and most options platforms do this for you. And they use what's called standard deviation, which is kind of a way of just measuring how volatile the stock is and then calculating that to essentially how much it's expected to move. So if we were to look at our option chain, and again, if you're new to options, don't freak out. All I want to point out is that if we look at the expiration for these options that we're looking at next Friday, the platform actually tells us exactly how much those options are priced to, how much Zoom is expected to move before next Friday. It's expected to move about $3. So if we were to take $2.91 and add it to what Zoom's currently trading at, $80 and change, we'd get somewhere about $83. Now, if we go back to a risk profile, this one standard deviation move, up or down, also coincides with this gray shaded area in the background here. So visually, we can look at this and just go, oh, cool. Well, I know that Zoom is not likely to move more than this. right? It's not likely to go up above 84. It's not likely to get to 87, 88, 89. Maybe with more time it would. But without some extra volatility coming in, without a catalyst, without a reason to drive the stock higher, this is the normal expected move for Zoom. So if we don't have a catalyst to push us before next Friday, right? If we don't have some unexpected volatility coming in, do we really need to pay $163 for all of this upside? This is kind of just a theoretical, hypothetical question for you guys. If I pay $163 for that option, betting that Zoom is going to go up, well, do I really think Zoom's going to get to 100 by next Friday? Probably not. Do I even think it's going to be above 87? Probably not. Statistically speaking, it's probably not going to be above 83 by next week. So do I really, really need to pay for all of this upside, right? Do I need to pay, like Scott said, it can go to infinity. Do I really have to pay for the chance that it might go to 200, right, by next Friday? Is that likely? No, it's not. And when we're trading, we always want to trade the highest probability moves, right? I'm not looking to get a lottery ticket. If I wanted to do that, then I would buy a lottery ticket, right? I'm trying to trade, and I'm trying to trade as high probabilities as I can. So something you can do that's super cool with options is when I start the trade, before I even put it on, I can actually just sacrifice all of that potential upside, all of this up here that is unlikely to happen, right? All of this potential of Zoom moving up above 85, 86, 87. I know the stock's not likely to get there. So what I can do is actually sell that upside. I can say, you know what? I'm not going to get any more profits if it gets up there. And what that does is it creates a structure called a spread, where I can, let's say, buy an 80 strike call. So I'm betting on Zoom going above 80, but then I sell the 83. So I'm saying, I think it's going to be above 80, but I don't think it's likely to go above 83. And when I do that, look at what changes here. When I turn that on, now my structure looks like this. I've still got this up rightward movement, right? So I'm still making money as long as Zoom is going up, but Zoom's probably not going to go above 83. So I don't really need this line to keep going to infinity and beyond, right? I'm happy selling my upside above 83. Now, the other really cool thing that happens when I do that, and this is the part that interests me the most, because you might look at that and go, well, why not have the upside just in case Zoom has a huge explosion, right? It doesn't hurt you to have it. Well, it kind of does. The reason that I would be happy selling this upside and doing this spread here is for the other thing that happens. You guys might not have noticed, but my risk here is now a lot less. This line used to be down here at 163. Now it's up here at 109. So instead of potentially losing $163, the most I can lose is $109. And that's because I actually brought in money for selling this 83. So I paid 163 on the 80, but I received some money for selling all of that potential upside above 83. And that offset my cost basis. So instead of paying 163, I only pay 109. And I can't risk, or I can't lose any more than I paid. So my max risk on this is now 109. Well, let's break out the calculator real quick. If my current risk is 109, and my original risk was 163, the difference there is 54 cents, right? So 54 cents I have taken off the table. Before I even put the trade on, I've taken 54 cents of risk out of the trade. If I divide that by my initial risk of 163, right, what I would have paid without selling the upside call option, without creating this spread, that's 33%. I've taken a third of this risk in the trade off the table before I've even started. So I'm still betting on Zoom going up. I can still make money within the expected range of Zoom moving up to 83. All I'm saying is it's not likely for Zoom to be up at 90, right? So I really don't need all of that upside. I'm happy selling all of that potential upside because the stock's not likely to get there anyways. It's statistically unlikely for it to get there. In return, I would like to reduce my risk by 33% right off the gate. Thank you. I would love that. Very, very big fan of that type of trade. So this is the sort of things that I love options for. One, my risk is completely locked in. I cannot lose more than I paid for my options. At the same time, I can do things like spreads that give me even better risk reward ratio. So if Zoom was going to go up to, we don't have to crunch numbers on this, but if Zoom was going to go to 83 by next week, I'd make $137. If I do this vertical, I'd make closer to $200. So not only does my risk get reduced by 33%, but I also make more money when Zoom does go in that expected range. So I take less risk and I get better returns at the same time. To me, that is absolutely maximizing trading. So that's why I love options. That's the kind of things that I love to talk about, to teach about, because that's the kind of things that I do. And with that, I will go ahead and hand it back to Josh. So that's been my speech for maximizing your trades.
That was so good. I love that, Chris. Did you guys love that? Give Chris an emoji shower right now, and extra emojis for a really cool t-shirt and jacket. I just try to be more like Chris every day. He keeps me young. So, really good. How many of y'all, so let the emoji love come in for Chris, and then type a 1 in the chat pane if you guys learned something. Now, I want to encourage you as well. Everybody should sign up for the options apprenticeship, because Chris will start you from the beginning. It's designed for people that are taking a step from stock into options. Like this is that next right step for you. So Chris dove in and showed you some of the nuances, the strategy that you can do with options. And that's just one. There's literally like 600-page textbooks of option strategies out there, because they are so flexible and they allow you to create such a maximization on your trades. So yeah, you can do it with a smaller account. Do you have a recommendation, Chris, for what size account would be ideal?
I do. So the first thing I would say is that that trade that we just looked at would cost you $109. So, I mean, I don't know how small we're talking here, Brenda, but most people have $109 in their trading account. I don't recommend that people start trading options with less than a few thousand. 10,000 would be comfortable. 5,000 is doable. If you start smaller, you just have to take smaller trades, but spreads can help with that. So that's the first thing I would say. The second is that you can start totally for free, right? I don't recommend that you guys open up a trading account and just start trading options right away. I would highly recommend you start with a paper trading account and practice, because you're going to make mistakes. You're going to press the wrong buttons. I know, because I did. And it's much, much better to start with a paper trading account, not real money. Learn how to do it first, then you can move on to a real money account. So during that time, you can be saving up and accumulating and building a real money account.
So good. Chris is going to stick around. He can answer some more questions in the chat. I want to push forward here. My goal is to get us out of here before an hour and a half, because I don't think we've hit that goal once this whole summit. So, and I've got a little bit to wrap up. Chris, thank you so much. That was really, really fantastic. And you and I were on the same page. I probably just didn't set you up as well as I could have to talk about maximizing the trade. I'll let you handle I'll get distracted with the chat. I'll let you handle that, Chris. So you guys ready for a hard left turn? Everybody can hear that record screech in their ear, and we're gonna go this way. There's a guy that wrote a book called The Road Less Stupid. His name was Keith Cunningham. If you've ever read The Rich Dad, Poor Dad, Keith is the rich dad in that allegory. And I had the privilege of mentoring with Keith for about 4 years. I really attribute a lot of my success both in trading, but also in other adventures, real estate and whatnot, to Keith. And one of the thoughts that I had as I was considering how to wrap this up is this idea that there's a generational reset of knowledge and experience. And one of the things Keith teaches in his book, The Road Less Stupid, is the power of thinking time and mentorship. In fact, right now, somebody knows the answer to your most pressing trading need. I promise you, there's nobody in this room that has a question that there's not somebody who has the answer to it as it relates to trading. And so my question is, what's preventing you from accessing it? It could be that you don't know who that person is. It could be that you think you can't afford their answers. And I would ask, well, how much is that costing you? Like, out the door for a quarter of the apprenticeship is under $3,000 is what somebody will do the math, like $2,200 or whatever. Like, not a big amount. It could be that you're determined to figure this out on your own. Excuse me, hiccup. My dad's kind of like this. If I'm candid about that, he's an engineer and he loves to figure everything out on his own. And that's great. It just takes him about 10 times longer than it would if you had somebody show you how to do it. And it could be that you're happy with where you're at. I heard a quote from Tony Robbins, or maybe it was Jim Rohn. Alfonso mentioned Jim Rohn yesterday. And the quote went something like this: you're either growing or you're dying. There is nothing in this natural world that just stays the same. And I would encourage you to take a look at either your trading, if you're already a trader, or your life, your finances, if you're not yet a trader, and say, where am I determining to grow this year? Because if you're not growing, then you're dying. Your trading is not improving, then it's dying. If your finances are not improving, then they're dying. And so I'm curious real quickly, I don't have a poll to pull up, but you can type in the chat pane, which one of these, and it may be multiple, do you connect with? A, you don't know who the person is that has the answers. B, you can't afford them, at least in your own mind. C, you're determined to figure it out on your own. D, you're happy with where you're at. Or E, none of the above. Maybe you're like, yes, I'm ready to ask the questions of the person. And Deanna says that's her. I think you're in the apprenticeship, right, Deanna? Did I see your name come through? So as you do that and you type in your answers, I thought what I would do tonight is share with you a little bit of my trading journey. And my hope is that you will see a piece of yourself at some point in this goofy clarinet player's trading journey. You see, if we rewind the clock to 1997, it all started with a girl, and indeed, I was a clarinet performance major who had a crush on this hottie sitting next to me here, who I later married, by the way. And do you know what the financial prospects are of a clarinet performance major in 1997? Not very good is the answer to that question. And do you know what the likelihood of winning the heart and affection of a beautiful woman when you're basically on a fast track to being destitute? Also, not very good. And so a friend of mine took pity on me, and he realized, oh my gosh, Josh likes Jen, but he's a clarinet player, and he's really not gonna be able to make much of his life. And so he gave me a book that he thought would help out called The Wall Street Money Machine by Wade Cook. And I thought, yes, that's what I need. The Wall Street Money Machine. Now, pause my story. I don't endorse this book. You can still get it on Amazon, and there's about 1 million used copies that you can find. But I don't endorse it for 2 reasons. Number one, Wade Cook made a lot of money in the stock market. Wade Cook failed to pay taxes on the money he made in the stock market. And so the IRS put Wade Cook in the adult penalty box. That's jail. So Wade Cook went to jail. I can't endorse his integrity. I mean, if you're going to go to jail, not paying taxes is probably about the best reason I could think of for going to jail. But I don't endorse his integrity. And furthermore, this book at this point is like 30 years old. I think they still used fractions in this book. They still used bar charts in this book. The strategies are so outdated in this book that it's just not going to help you very much unless you want a little piece of my history. And every time I teach this class, I say the same thing. If somebody has a signed copy of this book, I will give you free access to an apprenticeship. Now, it needs to be signed by Wade Cook. I should stop saying that, Rebecca, because somebody's just going to sign the book and be like, here, it's from Wade. From Wade to Josh. Ha! Joke's on you. Wade's dead. And I never met him. But I am so grateful to this book because it ignited in me this thought of, you know what? In addition to playing my clarinet, I might be able to make money in the stock market. And so in 1999, I opened my very first account with my life savings. I had $500 in a Crown Victoria. Also in 1999, I had a Crown Victoria because I had lost all my life savings. Gone. Whew, that went fast. But I didn't quit. I don't know why. it must have been my charisma. I won the heart of the girl. I married the girl in 2001. 2001, we got married. 2004, we started having kids. Look at that. That's baby Caden in the picture. Caden's in here right now. Caden doesn't look like that anymore. His cute little blonde hair. We got married. We started having kids. I went from broke to really broke. So what do you do when you're really, really broke? Well, you start a business, of course, because that's a great way to not lose more money. So in 2005, I started my business. In 2005, I funded my account, my trading account again, with my very last $3,000. I skipped a step in here. 2005, I borrowed $50,000 from my dad. I borrowed $50,000 from a credit card, and I lost $97,000 on my business. Made literally zero sales. You know the adage, go big or go broke? Well, I went big and I went broke really fast. So my last $3,000 that I had borrowed, I put back in the stock market. And at this point, my results were mixed. I didn't lose it immediately, but I didn't go from $3,000 to $30,000 as today's YouTube videos would suggest is possible. Did you all know that YouTube's maybe not trustworthy? So along came 2007, and I met perhaps one of the most influential people in the timeline of my life, Maurice Painter. Maurice Painter's still alive. I've never asked him how old he is, but he's got to be in his early 80s at this point. Maurice is a former fund manager and a high-profile executive coach, and I had been invited to an entrepreneur's breakfast. Because if you lose $97,000 starting a failed business, you too could be called an entrepreneur. I actually think my friends took pity on me because they thought maybe I wasn't eating very much, seeing how broke I was at the time. So I showed up at this entrepreneur's breakfast, and Maurice was the keynote speaker there, and he talked about his time as a fund manager and managing risk and how managing risk related to business and all these things. And I thought, that's the guy that I need. I need Maurice to teach me how to trade the stock market. And so I walked up to him, probably with an air of arrogance in my step, and I said, hey, would you teach me how to do that thing that you do, trade the stock market? Now, you have to understand, back in this time, and furthermore, back when Maurice was managing portfolio, they used chalkboards for their analysis. He has a picture that he showed me of these chalkboards all around his office, and he would have an assistant that came in on the hour, every hour, and they would update the different sectors and indices that he was tracking, literally on a chalkboard. I thought, wow, that's very cool. I don't know, again, it's got to be my charisma. There was no logical reason why Maurice should have agreed to coach me, but he said he would. But he said, here's the deal, kid. I'm not going to do this for free. I'm not going to charge you on the front end, but I'm not going to do it for free. I want a piece of the upside. Can you do that? I said, yeah. Pay you on the back end? For sure. When's our first lesson? He said, well, not so fast. I need you to first fund a $5,000 trading account so that we can trade options. You just learned about options tonight with Chris Burgess. And I said, Mo, you missed the part where I came to breakfast because I was broke and starving. I don't have $5,000, Mo. And he said, well, Josh, when the burden is strong enough, you'll find a way. Now, the reason I've chosen this picture for this slide is because I found a way. I was shopping in Goodwill, not because Goodwill had the finest fashion in it, but because I was broke, and that's what I could afford. And it turns out Goodwill has a half off day. And it turns out when you live on the outskirts of Nashville, Tennessee, a bunch of rich country music artists and people in the industry buy baby clothes that they never use, take them to Goodwill to get the tax write-off, and they're sitting there with the brand new tag on it and the Goodwill half off tag on it. And I thought to myself, I think I could sell those on this newfangled website called eBay. And so I went with my last like $20 that I had to my name. I bought up every piece of baby clothes that I could find. And my wife and I began putting them together into matching sizes. To this day, we pioneered this industry. I don't know if we literally did, but I probably got the idea from somebody else. But in my mind, we pioneered this industry. And to this day, you can buy lots, L-O-T-S, lots of baby clothes, as in they're grouped into sizes on eBay, size 0, size 1, size 2, baby clothes. And that's what we did. Jen took the cute little pictures. I wrote up the little description. And we sold enough baby clothes on eBay to fund a $5,000 account. When the burden is strong enough, you'll find a way. God bless you all. For those of you that signed up for a year, I'm just asking you to find $297. Like, that's your Starbucks budget. And I'll give you the trading account. Maybe that's a mistake, Rebecca. Maybe we should charge them $20,000 because maybe they don't take it seriously when we give them the trading account. And so I jumped into the market in 2007. Do y'all remember what happened to the market in 2007? Market lost over 50% of its value in 17 months. And my mentor, Maurice, taught me how to buy put options. I don't know how much you know about options trading, but if you sold short when the market was going down, you would have made money. If you bought put options when the market was crashing like this, you made a lot of money, fat stacks of cash. So much so, true story, my dad asked me what I was doing because I was too much of a goody two-shoes to be selling drugs or doing something illegal. He was like, how are you making so much money? And my first student was born that day. I said, Dad, meet my friend Maurice, and he's taught me about the stock market and trading puts, and the market's crashing, and this is amazing. And I learned something important in that experience. Mentors create acceleration and certainty of success. Somebody needs to take a screenshot of that slide right now. Mentors create acceleration and certainty of success. I just went to a celebration of life service. If you're in different circles, some people call that a funeral. Guy was 50 years old. He's 4 years older than me. 10 kids. He couldn't figure out what caused it either. I have 5. He was out working on the property, pulled on a branch that any one of us would pull on to get it out of a tree, tripped, fell backwards, hit his head, and simultaneously the branch at the front of his head, he was instantly gone. Instantly gone. I'm sure Dwight thought he had another 30 years. And as I land on this slide, it is just hitting me here in real time. I don't know how much time we have. I don't know if I have another 30 minutes, 30 days, 30 years. But what I know is if I can find a way to accelerate my outcome and gain more certainty that I will achieve that outcome, then it's worth every penny. Mentors create acceleration and certainty of success. And the reason is mentors provide paradigm shifts. Some of y'all just had a paradigm shift at the beginning of class, and some of y'all think I'm stupid, and that's okay. Some of y'all are like, yeah, I'd pull the lever on the slot machine. I punched the emoji in. I was like, heck yeah, tell me what casino, when and where, baby. And then you realized, oh, after 5 years, that's shift work, and the ergonomic lever is giving me carpal tunnel. You had a paradigm shift. Turns out it's not certainty I'm seeking, it's freedom I'm seeking. And a mentor can prevent you from running enthusiastically in the wrong direction. You're running after certainty, and they say, wait, James, what you need is freedom, not certainty. We'll work on the certainty, but let's drive towards freedom. It could be a framework they give you, a lesson they give you. It could be the right question that's solving for the problem that is, PTI, problem that is. I didn't have room on the slide. You're gonna have to write that one down with your pencil. You screenshotters, you. I know how it works. A mentor can see your thermometer. Some of you are at 211 degrees right now. And you don't realize that you're one increased degree away from creating boiling water. At 211 degrees, you have hot water. At 212 degrees, you have boiling water that creates steam, and a steam can drive a locomotive. Some of you are all like 50 degrees. You should probably take Rebecca's apprenticeship. The mentor can see your thermometer and say, hey, don't give up. Or they can say, we got a little bit of work to do. A mentor can also see danger ahead and or any destructive behaviors. There's a thing out there, I don't really have time to go into it, but it's called the Johari window. Go look it up. You know how it got named Johari? Because a guy named Joe and a guy named Harry invented it, and they got a Nobel freaking prize for this. And they basically create these quadrants of things that you can see and things that you can't see and things that I can see and things that I can't see. And so if you can see it and I can see it, it's the arena. And if I can see it but you can't see it, this is where opportunity lies. Right? Go look this up. There's a million YouTube videos. Like, you can find it. The benefit of a mentor is they can bring things that you don't see into the arena so that you can have a conversation about it and avoid catastrophic failure. Moving on in my journey, 2008, I enjoyed a season of extended success. I paid off every penny of debt. To be candid, there was a little season of my life where debt scared me after that. I probably should have gone bankrupt in 2005, 2006, and I was just too stubborn not to. It was embarrassing to me. And I say that with the utmost humility, knowing a room of this size, somebody has gone through that pain. Also in 2008, others became interested in what I was doing. My wife's brother, his name's John, he was like, dude, he's like my dad. He's like, I know you're not doing drugs. So like, how are you making all this money? I was like, I'm selling put options, man. Let me tell you about it. And I taught my brother John, and then he had a friend that was in college, and he's like, hey, you need to teach this guy. So I did that. And then those people were like, we have these friends out in California. And I was like, whoa, hold up here. If we're going to do that, why don't we let everybody come? Send the word out on the street. True story, 2009, those three people, my dad, my brother-in-law, four people, my brother-in-law and his two friends out in California, invited 700 people to register for the very first, what would become official training. 450 of them actually showed up. I thought, that's incredible. You see, there was an interesting confluence of events. As the market was crashing, everybody said, wait a minute. My fancy manager, fund manager, just lost 50% of my account. I can lose 50% of my account. I think I could probably do even better. And it was colliding with the internet and webinars. We used a platform called GoToWebinar back then. And people decided to take control of their own financial future. By the way, fast forward, that was when people were investing their retirement accounts, scared the living daylights out of me. I'm like, I don't want to be responsible for what you're doing. Today I can hand you a trading account. If you're keeping track, this is what it cost me to achieve what most would consider success. I had over $8,500 in accounts. It took 11 years of my life. By the way, this is about a year ago. I don't know why Caden's not in this picture. This is my oldest daughter, my middle son, Josiah. I talk about him. He's the other trader. This is Brielle, and this is Zeke, and there's my sweet wife, Jen. It took 11 years of my life to achieve what most people would consider success. There's countless stressful nights. I found a journal, removed recently. I found a journal where I had written out some prayers in there, like, God, let me feed my family next week. Those were the kinds of prayers that I was praying back in 2005, 2006. And untold missed opportunities to build wealth and enjoy a different lifestyle while helping others. I used to stop my story here. And many of you have heard that story before, and thank you for sticking around if you have. And about 6 months ago, I decided to tell the second part of this story for the first time. And here it is. 2017, I stopped trading. A lot of you were around back then. And you were like, where did Josh go? I stopped trading, I stopped teaching, I disappeared. And I kind of went on this journey. We made 4 trips to Haiti that year. And if it's Caden, you cannot take a screenshot of this and show mama. I will forbid you of that. If Jen ever knew this picture existed on the internet, she would not be happy with me because Jen's the white honky in the middle of all these beautiful Haitians. And she's kind of the center of attention because she sticks out because of her pink shirt. But this isn't about Jen. This was about realizing that there are people suffering at levels I was completely unaware of, candidly. I was living in the outskirts of Nashville, Williamson County, one of the wealthiest counties in the entire country. And I had no idea. By the way, these are school uniforms, not jail uniforms. They look like they're jail, but these are school uniforms there. And we were in Haiti for about 10 days, and we were flying back home, and my little mind started running, and I was like, there's got to be a way to solve these problems, and I'm entrepreneurial, and I've got these resources in the stock market, and we'll just throw money at it. You know, very American. By the way, don't do that. There's a book out there called When Helping Hurts, and if you're going to become philanthropic outside of organizations that you support, I encourage you to read it. I'm not going to go into details now. That'll derail me, but I had this moment where I was on the airplane coming home, and I told Jen, I don't think I can fix this problem. It's just bigger than I am. And as we were discussing it, Jen said, I think you're right. I don't think you can fix this problem. But she says, you have a platform. You have hundreds of thousands of people that you connect with through Tradesmart. And if you could mobilize them collectively to help with the problems of the world, I think we might make a difference. And on that day, 2017, the Tradesmart ethos was born. I mentioned it to you in class 1. When good people have more money, they're able to do even more good things in this world. I believe that down to my core. There are some of you that will continue on. You won't do an apprenticeship. This will be the last time we have a chance to talk. I'm grateful for the season that our paths crossed. And let me leave you with this. I encourage you to master this. I encourage you to learn how to put fat stacks of cash in your jeans. And I encourage you to share it with somebody else. Now, don't steal my stuff. That's called thievery. We frown on that. But learn it, master it, make it your own, and share it with somebody else, because if we all work together and do what is right in your own world, I'm not even arrogant. Maybe it's Haiti. If it's Haiti, I'll give you some context. Our focus has shifted a little bit since that picture. But if you'll just find a way to be more generous with your server at the restaurant, hey, what about instead of leaving 20%, you leave 30%? Y'all, on a $100 bill, that's 10 extra dollars. It's nothing to you, but it means the world to your server. And so my question to you is this: what's your burden? This is the answer to our slot machine riddle. Because you see, if it's about pulling the lever, getting the dollar, creating certainty in your life, that's a job. But if it's about a burden, a mission that's driving you forward, now it becomes your why. Now I don't feel so bad pulling the lever. I pull the lever all day long if I can buy some shoes for a little dude in Haiti. I said our mission has changed a little bit. This is current events right here. I've blacked out the names. We have a boots on the ground active partner over in Nepal. And I have to be discreet and covert because it's a covert operation. But one of the things that happens in Nepal is they don't esteem value to young women, early teenagers. In fact, they're seen as a drain on the family because they're not expected to grow up and send home income. In fact, they're expected to grow up and leave with their husband. And so there's all this expense that you put into raising your kids. And if you're in a very poor location in Nepal, your circumstances can drive you to actually put your daughter up for sale and recoup some of your expense. It's gross to even say out loud. This is not a commentary on the Nepali people. We love the Nepali people. There's idiots in America too. Turns out there's idiots all over the world. And what we have found is if through our informants that we have, we can become aware of those situations, engage with the family and say, look, we'll release that financial burden. We'll pay for them to get through middle school and high school and college, and we'll give them a job, and we'll give you a little bit of a stipend to cover their food. Turns out they don't actually want to sell their daughters. And so we've been doing that now. We've got dozens and dozens of girls. This is the most recent batch of letters that I have received back from the girls. That's my burden. I can't dwell on this because it'll create unforced errors in my trading. But at some level, if I don't follow my rules, if I don't execute the trades the way that I know how, if I don't generate the income that I expect to generate in trading, there's quite literally and potentially a girl that won't get rescued. How's that for a little bit of leverage to get you to follow the trading plan? I'm going to wrap up with this. I will stick around and answer questions in chat. But when we get to the end of the slideshow, I just want you to think for a minute about what your next right step is. My friend, it has never been easier to make money trading. You say, well, Josh, I don't have a trading account. Okay, I'll give you a funded account. You've got exactly 50 minutes left. I'll give you a funded account. You say, well, Josh, I don't have time. No problem. You have instant access to the market. This cell phone sitting in front of you right now. You've got the time. We've got strategies, the morning glory strategy and Caden's apprenticeship. It literally takes you 5 minutes in the morning before the market opens. You've got the time. You say, well, Josh, I'm not really sure what to do. Great. Can I introduce you to Alfonso, Rebecca, Chris, Scott? They have the skills, the systems, and the protocols that you need to follow. I say, well, Josh, I can't really find any good trades. I encourage you to take up the mentors that provide trade ideas. Caden provides trade ideas. Alfonso provides trade ideas. The Power Hour in the hybrid apprenticeship. You say, well, Josh, you don't really understand my specific challenge. And my answer to that is, I want to. Our mentors want to. Friends, with the strongest possible compulsion that I can communicate, I would encourage you to consider getting the education, the application, the community and the accountability, the time-saving bonus, the easier bonus, the bonus that makes things easier, and the certainty bonus, and take advantage of that trader funding program. I say this knowing the regulations and the things that you can and can't say out there. In my opinion, unless you guys see something I can't see, this is 100% risk-free. I'm giving you the trading account for the next 48 minutes. I'm giving you 2 full weeks to bounce around, find the instructor that you need that's going to meet your needs. You're the beginner? Great. Go to Rebecca. You're a motivated beginner? Great. Go to Caden. You need some strategy? Great. Go to Valerie. Go to Alfonso. Go to Chris Burgess. You're a stud in managing $1 billion portfolio? Go to Scott. And even if you're not managing $1 billion portfolio, I believe in you. If you've got 4 or 5 years of experience or even 1 year of experience, I'd give him a call on the phone and say, hey, is this the right fit for me? Give it a try. If you don't see how you'll make 4 times your tuition payment, I'll give you a refund. I don't want your tuition if we can't deliver the outcome. But I'll also say this. You'll say, well, Josh, why not just make it free? Because, my friend, something that's free is literally worthless. Think about that in terms of relationships. We could go somewhere that's not culturally appropriate. I don't want a free relationship. I want my wife. I want to be committed. I want to put in as much as I'm receiving from that experience. And the same thing is true here. And candidly, There's an ancient proverb that says, a workman is worth their wage. Instructors deserve to get compensated for the genius that they bring to the table. It wouldn't be right to ask them to do it for free. But what is right is to remove all the risk. So I'm going to end with this. We're giving you the education, the application, the trading account, and the accountability. When is now the right time to invest in yourself? My dear friends, thank you for the last 4 nights. I hope that you have seen at least a pathway to putting $25,000 cash in your jeans. Blessings and favor on you as you go forward. If we can partner with you, if we can serve you in any way, I would love nothing more than that privilege to work together. If you have a question, email info@tradesmartu.com. We're real people that really care. Rebecca will hop on a phone call with you. She said she'd stay up late tonight. She wants every one of you to get those trading accounts. You have 45 minutes. Dear friends, thank you for the summit. Thank you for coming. Thank you for playing full out. I love and appreciate you. We'll see you soon. Take care.
We can go ahead and cut the recording there, Andrew. I just wanted to stay on for another minute or two. I actually have to run real quick, but I wanted to answer. Brenda was asking some questions, and I told her it was just kind of too much to type out. So I want to just hop on the mic and answer her real quick. So if you guys aren't following our conversation, by all means, you don't need to stick around. I hope you all have a great night. We had a great 4 nights here at the summit. I hope you enjoyed it. It's been fantastic. I'm going to stick around for just a second here and answer your question, Brenda. I hope you're still here. So she was asking about needing to have shares when you're trading options. She said, I've been told before that if options go against you, then you need the equity in the account to buy those shares. It's technically not true. Now, the way that I trade options, it's not true at all. What I was showing you before, where you are buying options, you don't need the stock at all. I almost never touch stock unless I get assigned. And even that's very easy. You just exit the position and you're done. Where I think that comes from is from people that are selling options. So if you are, for example, doing a covered call strategy, which is what I talked about in my VIP session earlier today, that strategy is based on you owning shares. So it works hand in hand with shares. Technically, you can sell the call option without the shares. The problem with that is that it's no longer covered. So, if I sold an option for 80 and then the stock jumps up to 90, then I'm on the hook for that $10 per share. So it's very dangerous to do that, but technically you can. So I'm never going to recommend that you do that. I'm always going to recommend that if you're going to sell options, you need an offsetting position. And that's kind of one of the things that we talk about a lot in the options apprenticeship. Of course, I'm not just going to send you guys out blindly and not know this sort of thing. But it's a bit more of a nuanced answer, but technically the answer is no, you don't need shares when you're trading options. It's just if you're going to sell options, not buy them, but if you're going to sell options by themselves, it's very dangerous without shares. So that's where I would end that. Good question, though. So thanks for asking.